Welcome back to the channel, everybody. So we have some XRP news, we have some Solana news, Bitcoin, housing market news, commodities news, banking news. We got a lot of stuff to cover today. I know you heard about the Ethereum ETF approval, which had nothing to do with Garlinghouse, with Gensler. Had nothing to do with him, all right? But we'll get into that a little bit later. We have an article about that, but things are looking good. So now that we've gotten the Bitcoin ETFs out of the way, we've gotten Ethereum ETFs out of the way, it's like, who's next? Who's next? You got a few big ones out there that could happen. You got XRP, could definitely happen. That's definitely on the table. You have Solana, definitely is in the game. I don't understand. Why would Chainlink? I don't understand. Why would Chainlink not be in play? I don't hear anybody talking about a possible Chainlink ETF. I don't know. But I would think it would be up there with XRP, Solana, and that's how I would look at it. But anyway, we're going to start off here. This article is titled, Ripple CEO Indirectly Confirms XRP ETFs Coming. I don't know how. He could just give his opinion. You want to be realistic. That's all he can do is just give his opinion. He can't say it's coming right now. Like, I just don't see that being possible. They'll have to go through the processes and, be approved. And, we'll see how it works out. But anyway, it begins as such. Ripple CEO Brad Garlinghouse has indirectly confirmed to the XRP army that XRP may be the next crypto ETF amid approval from Ethereum spot ETFs. Garlinghouse gave this subtle hint via his reaction to a comment on his post celebrating the recent authorization of Ethereum spot ETFs. Notably, the U.S. regulator assented to 8 Ethereum spot ETFs. Ouch, ow, 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 ow. Sorry, that's exactly how members of the SEC felt when they had to dry their eyes as they watched those Ethereum ETFs be approved. Like I said, there are those who are not on board with this. This went through other avenues to get approved. We'll get to that article in a little bit. Don't worry about it. So I know it hurt some of them, especially Gensler. Yes, I'm laughing at his pain. It says, taking to X, the Ripple CEO reflected on the significance of the SEC's approval and the passing of the FIT21 crypto bill, describing the week's events as momentous for the industry, akin to a, quote, hell freezes over, unquote. I'm going to assume he means a hell freezes over event, but he's filling the gaps there. And then it says, let's scroll down here. Ripple CEO agrees that I'm going to assume it means XRP. This is clearly it has to be a typo, because if it's not, what the heck is XRF? What's XRF? They meant XRP. The writer is tired. He or she put in a lot of hard work this week, I'm sure. Reacting to Garlinghouse's remark, 3 XRP enthusiasts suggested that an XRP spot exchange traded fund should follow the Ethereum-based ETFs. Interestingly, the Ripple CEO endorsed these suggestions by liking them. Yeah, I mean, he probably agrees. It's probably his opinion as well. And I mean, rightfully so. XRP you have Bitcoin. These are the top dogs. You got Bitcoin as far as institutions are concerned and support is concerned. Bitcoin, Ethereum, you got XRP, Solana. I will put Chainlink up there as far as support across the board from retail as well as institutional support. So XRP would definitely, I think logically would be next in line. However, we have to see how that goes. There's a lot of games being played right now. So now things are looking good though. They're looking really, really good. All right. So, and it's Friday, folks. We made it to another Friday. Yeah. Made it through the week. We were on our grinding. You know how I keep in the line and better stay in line. How many people are actually old enough to remember that song by the Clips, Grinding? I'm just saying, it's a classic. It's a classic. Anyway, and I got some of the lyrics wrong too. Anyway, here, all right, so we have an article here and it's titled XRP ETF might be launched in 2025. Now, this is coming from Standard Chartered, okay? I'm trying to get the whole bunch of different thoughts here. And that's usually what I do. I try to read from a bunch of different sources and then I take the median of that, like the average of that. But at least I get the sentiment that most minds are thinking across a broad range of people coming from, various backgrounds. I probably didn't say that so eloquently, but you get what I mean. So this is coming from Standard Chartered, and it begins as such. According to the banking giant Standard Chartered, an XRP ETF could be launched in the U.S. next year. When asked about the possibility of launching an ETF for the XRP cryptocurrency in January, BlackRock CEO Larry Fink said that he could not talk about it. We remember that, but why slide that in there? Tell me more about what Standard Chartered has to say. It says Fox Business has also reported that BlackRock had no intention to launch an ETF for the Ripple affiliated cryptocurrency. Yes, but why, once again, why are you sliding that in here? Like, do you have any new information? Is that all that Standard Chartered said? Because that's what I was interested in hearing more of. It says, however, Ripple CEO Brad Garlinghouse said that altcoin-based XRPs, what did he mean by that? Somebody must have been really, really tired. Altcoin-based XRPs seem to be, I think they meant XRP ETFs. They didn't put that ETF word in there. It says, seem to be inevitable. It's a typo. Quote, inevitable. He said that the company would welcome such a product for XRP, notably a bipartisan group of House lawmakers recently sent SEC Chair Gary Gensler a letter urging the agency to approve ETFs for Ethereum. But that's already got that done. It says, is Solana. Okay, so someone thinks similar to what I was saying. But I said this a while ago. You know, a Solana has to be in there, has to be in the discussion. Is Solana next as well? As reported by Today, CNBC reporter, contributor, recently predicted that Solana could be the next altcoin to get its own ETF after Ethereum. Listen, it doesn't make a difference if ETFs are going to continue to have a positive effect. It doesn't matter if it's XRP first, Solana first. For me, it doesn't make a difference. Either one, I win. Both of them, I win. That's how. Like I'm well diversified. So I believe both of them will do well in the future, but I think they both will have ETFs. There's going to be a lot of ETFs in the future. Who comes first? I don't think it really matters, but I will say that the so-called XRP community definitely has earned that right to have some good times. That's how I feel. That's how I will phrase it. They've been through a lot of hell. It says Standard Chartered appears to be on the same page, suggesting that the popular, quote, Ethereum, I'm going to say competitor, they use a more foul word here, could also be a likely ETF candidate. It says sky high price targets. Okay, so they have a price target up for Ethereum of $4,000. Let's see, what else? You don't have any other price predictions? Standard Chartered has forecasted that Ethereum price could end up hitting $8,000 by the end of the year. Holy smokes. All right, talk about super bullish. Let's move on here. You know what? We'll skip this next article. This next article probably is saying something similar. It's titled Solana and XRP ETF are next. Yep, and they're talking about Standard Chartered. So let's skip that one and go here to a Bitcoin article. So this article is titled Bitcoin Whales Absorb 24,000 Bitcoin in the past 24 hours. What's happening? That sounds pretty bullish to me. And it begins as such. According to a recent tweet published by crypto analyst and trader Ali Martinez, large Bitcoin holders known in the crypto community as whales have decided to take advantage of the current BTC dip. I didn't think that it went down enough to consider that anything significant, but maybe I'm wrong. Where's consolidating at right now? Seems like a very small area. Maybe I'm wrong. I don't know. Maybe people feel different. Over the last 24 hours, the world's flagship cryptocurrency plunged by 4%. That's what I'm talking about. Dropping from $69,000 to $66,980 price mark. However, a rebound that followed took it back up to 1.70%. At the time of writing, digital gold changes hands. I don't like when they call Bitcoin digital gold. I don't. There's real digital gold, like tokenized real gold, which a lot of us are deep in. Like, we got the physical stuff, you got the digital, and you diversify a little bit, but that's digital gold. When I think digital gold, I'm thinking real gold, not Bitcoin. Bitcoin is Bitcoin. You don't need to compare it to anything. I don't like that. It says, but it says digital gold changes hands at $68,180 on Bitstamp exchange. It was while Bitcoin dropped below the $67,000 level that whales decided to buy the dip and scooped up as much as 20,000 Bitcoin. This amount of the leading digital currency is valued at a staggering 1.34 billion in fiat. Bitcoin price plunge coincided with the approval of the Ethereum spot ETFs issued by the Securities and Exchange Commission on Thursday. These Ethereum ETF funds got approved half a year later after the spot Bitcoin ETFs. However, experts believe that demand on the spot Ethereum ETFs will not be as strong as for the Bitcoin ETF. We shall see, won't we? We will see. I don't understand that thinking. I just don't. And once again, I have no Ethereum. I don't plan on going heavy into Ethereum either. But Ethereum is a moneymaker. I don't see why they would be less bullish on Ethereum. And there's an opportunity there also for Ethereum price to increase dramatically. There's a lot of gains to be made there if you're institutions. But we have to wait and see. We have to wait and see. Let's move on here. So we have a sort of a depression / stock market article here. I always like to hear from Cathie Wood. I like a lot of her thoughts and a lot of her activities. This article is titled, Cathie Wood Sees a Great Depression-like Search for Safety in the Stock Market. Right. It begins as such. Something funny happened in the market on Thursday. The most eagerly awaited report of the entire earnings season, Nvidia's more than delivered. And while the chip makers' investors benefited, the rest of the market slumped. The blame fell on rising interest rates, of course, after better than expected economic data. Cathie Wood, the chief executive and chief investment officer at ARK Invest, gave a broader perspective. Quote, in our view, the search for cash and safety in the equity markets today is as intense as that during the Great Depression. Now, the question is why? Why? And when you start asking those questions, oh boy, you open up a whole can of worms. All right, so now let's move on from there. I just wanted to cover that a little bit. Because it was impactful. Let me tell you, we are living in interesting times where dramatic turns can happen at any moment. But now, here's this information on the SEC so we can get a deeper look into the dynamics that went into the approval of the ETFs, because we definitely don't want people to begin thinking that, oh, Gensler had a change of heart. No, he didn't. No, he did not. But this article is titled, No, SEC Chair Gary Gensler and the agency's commissioners did not vote on approving spot Ethereum ETFs. All right, so now it begins here. The SEC. Why did they write it like this? My apologies, folks. Bear with me one moment. It says the Security and Exchange Commission's Trading and Markets Division, not the agency's commissioners, made the decision to approve forms for a slew of spot Ethereum ETFs. And in order approving 19B-4 forms for ETFs from BlackRock, Fidelity, Grayscale, Bitwise, VanEck, ARK, Invesco Galaxy, and Franklin Templeton, there was a line at the end that sheds light on how the decision went down. It says, quote, for the commission by the Division of Trading Markets and pursuant to delegated authority, unquote, the order said. This means that the SEC's Division of Trading Markets, not SEC Chair Gary Gensler or the 4 other commissioners, made the decision to greenlight spot Ethereum ETFs, which would, I think, logically should hint that even though this was completed, all right, and it's great for crypto, that these other entities, Gary Gensler and others, may still act as a thorn in the side of crypto majorly, right? But it also confirms what we've read in the past, that there is division in the SEC about how to go forward with how to approach crypto properly. It says, when the SEC approved spot Bitcoin ETFs earlier this year, the commissioners voted. SEC Gensler approved alongside other commissioners Hester Pierce and Mark Uyeda. Democratic commissioners Jamie Lizarraga and Carolina Crenshaw disapproved. It says many of the commissioners also released statements on the spot Bitcoin ETFs. The SEC said on Thursday that it won't be commenting beyond the order. I don't understand, but why go into that about the Bitcoin ETFs right after you spoke about the Ethereum ETFs? What is the relevancy here? Just to show that there's a split, maybe? I'm assuming. It says Bloomberg ETF analyst James Seyfert called the agency's decision to use delegated authority normal. Quote, making decisions via delegated authority is the norm. This is how things are typically done. If SEC required an official vote for every decision on every document, it would be insane, unquote, Seyffert said in a post on X Thursday. Quote, it would have been nice to see where the political lines were drawn, though, unquote. Once again, I find that thinking silly. Not this individual, how they're breaking it down, but the operations within these regulatory agencies. It should be about the people. It should be in a world that's realistic, in a world that's fair. It should be about the people. What can benefit the people? That is what they say, right? They don't come out and say, this is my political affiliation, so this is how I'm going to make decisions. No. I mean, that's what this individual is saying that they do here, right? They make decisions based on that. Like, no, it should be, okay, what's best for the people overall? What's going to keep them safe? Because that's what you proclaim when you're taking actions against crypto and others, right? You say, well, we're doing this to protect the people. All right, so actually embody that. And that's what the people should force them to do. But hey, just my humble opinion. All right, so now that we put that information out there, let's move on here. Little great wealth transfer news. So, and tell me this doesn't sound like what I've been saying for the last year and a half that I've been covering this. This article is titled, "The Great Wealth Transfer Will Be a Boon for Crypto," says billionaire Mike Novogratz. Here's why. Let's see if he goes along the same lines of what I've been saying. Says Galaxy Digital CEO Mike Novogratz believes that the so-called great wealth transfer could give a huge boost to Bitcoin and other digital assets. In a new CNBC interview, the billionaire says that millennials who stand to inherit the largest transfer of wealth in history are more inclined to invest in digital assets than their parents and relatives. I don't like these categorizations. I'm skipping over some of them. Like, they use these terms like boomer, and I don't like that stuff like that. It tend to have a negative connotation to it when I've heard these types of things. So I just skip over it. Quote, and it's not necessary. We know who the older people are and who the younger people are. We're very wise. Quote, those younger people love crypto. Some of them. They love Bitcoin. Some of them. They don't love gold. What? They don't love gold. See, now you're saying this as a blanket statement, but are you actually out there in the world? Because I talk to a lot of people all the time. Now, I'll tell you what, a lot of people have gold, sir. Yeah. And I'll tell you what might be more shocking to you. A lot of people have silver. They love silver, But I don't know where you're getting this. They don't love gold. Okay, all right. It's your opinion, to each his own. It says even meme stocks. This way doesn't get. Let me pause there. I think some of these so-called billionaires, I think they're detached from regular society to such an extent that they don't understand the conditions that exist right now, where it's not just one generation of people. I think a lot of people across generations are trying to make money anywhere that they can. No one is absolved from what's been going on in this economy. It hasn't been easy at all, especially for, let's say, small to medium business owners. So you're trying to make money everywhere that you can. It's not a generational thing, in my humble opinion. From what I'm seeing, folks, when I'm out and about, this is what I'm seeing. When I'm dealing with people, I deal with a lot of people all the time. It says here, older people are like, I can't believe Dogecoin. What a waste of time. The people that you know or the people that are being reported to you by your advisors? How big is that sample size? It says you talk to the 25-year-old and they see it differently. Listen, let me tell you something. The older people that I know are really, really good investigators, very good researchers. And they look into things. Now, you're going to use Dogecoin, but I'll say this. No matter what it is, the people that I encounter, they will take something, they hear about it. If it's a moneymaker, they'll look into it deeply. They'll do their own research, run it through financial advisors as well, researchers. They'll pay some people some good money. And they'll look into it and see if this is a viable way to make some capital, how risky it is. They'll get a whole report worked up, and then boom, they make a decision from there. I don't know who you're talking about. But it says, and so overall, the overall space, having digital assets, feeling comfortable in a digital world is just so much more enthusiastic the younger you get. Really. And so we're going to see, let me tell you, sorry, folks, I have to interject. I've spoken to a lot of younger people, and I'll tell you what, a lot of the younger people that I've encountered over the last few years, they're in the stock market. You talk to them about crypto. A lot of them are not in crypto. I'm telling you from my experience. I don't know other people's experience. They're not in crypto. They're in the stock market. I don't want to give too much away, but I think there's a balance. There's a balance, but I think you want it to be this way. Yes. Do I believe that a lot of that could come to crypto? I do, but not for these reasons here. Not for these reasons. I actually am going the opposite way. I think a lot of older people and middle-aged people, I think that they're looking, that this is why the cash pile remained on the side, even though they said the cash pile will move into stock market. They said that last year, but it never did. There's still a huge cash pile on the side. It has not moved at all. Okay, if that's the case, what is it waiting on? Who put the cash pile on the side? Right. Okay, so, but now that would go the opposite of what you're saying. Not that it's going to be handed down, but that all the experts said that it's going to move. All right. That's why people are keeping that liquidity there. But if it's going to move and it's being moved by older and middle-aged people, it could move into crypto. But you're saying, no, it has to be handed down to the younger people in order for it to go into crypto. I'm going to go against that narrative. I think the younger people would look for things that they've been talking about widely, which is housing. A lot of younger people want to acquire a house, but they say they can't afford a house. A lot of younger people want to move to better areas, but they can't afford to do it. I think that the younger people actually are thinking about the basics in life more than a lot of previous, I don't want to say generations, but like the way the thinking has gone over the past few decades, where it's become very superficial and materialistic. I don't think that the younger generation is like that right now. I think they've been forced to consider the necessities of life, like food, putting some money away. I think the younger people are actually much more wise than people give them credit for. I really do. So I think they want to acquire houses. I think some of them want to move out of the United States. I think some of them want to buy land. I see a lot of younger people talking about buying land. I've never heard that before from younger audience until this last year and a half. They're talking about starting, ranches and homesteads, whatever you call it. They want to buy land. This is what I'm hearing. And here's the thing. Now, when they're in these financial circles, they talk about that. But when they're amongst their regular people, they don't talk about that. So it's not something a lot of people would know. They're only discussing it with like-minded people. That's another thing, too. So a lot of these activities and thoughts are not something you're going to be able to poll, because a lot of people try to keep their plans quiet unless they're around like-minded people. That's what I'm seeing. Sort of a wheat separated from the tares type of thing, or if I got that phrase right. There's a separation happening. So anyway, it says the Great Wealth Transfer will hand $90 trillion in assets to millennials over the next 20 years, according to the global real estate consultancy firm Knight Frank's 2024 Wealth Report. By 2030, millennials are expected to have 5 times as much wealth as they have today, according to Coldwell Banker. All right, so I know I gave a lot of thoughts in that one, but that was an interesting article. Anytime you hear me give a lot of thoughts, that means the article actually was entertaining to me and it was fun. So now, this article here is titled, it's from shiftgold.com, it's titled, "To Prevent a Banking Crisis, the Fed Must Cut." How are they going to do that? How are you going to expect the Fed to cut right? I just don't see it happening. It says here, in 2009, 140 banks failed. And a recent report from financial consulting firm Claros Group says that hundreds of banks are at risk of going under this year. Okay, so at least you're confirming what others have reported. Is being billed mostly as a danger for individuals and communities than for the broader economy, as though that ripple effect is not going to touch the rest of the economy. Come on now. I disagree with that, respectfully. But for stressed lenders across America, a string of small bank failures could quite quickly spread into a larger bloodbath. We read from some experts recently that there are larger banks at risk. It says, especially in an economy with hot inflation, yes, and a feverish addiction to ultra low interest rates. But who created that environment? It says most at-risk firms are smaller banks representing assets under $10 billion with a handful of larger regional ones. Now, see, you had to tell the truth. A handful of larger regional ones, which when they are affected does what? It has a ripple effect, or what the system likes to call a contagion. And that's key. It says some might be able to avoid closing by halting expansion plans or offering fewer services. Others might save themselves by merging with larger banks. And merging with larger banks. And that's exactly what Janet Yellen said. And that's exactly what Jerome Powell said last year. Now, they both made those statements almost back to back. I think one was in either May, and I think another statement was made in June. This was widely reported on. Yes. And this is another reason why the new financial system, I think, is going to be so successful, because the smaller banks want to grow. They don't want to hand over everything they've built, everything they've done to the larger banks, but they see that the game is rigged and the larger banks are just rubbing their hands together like Birdman in order to absorb them. It says, but inflation too high for the Fed to cut now. That's why I was saying, how do they cut? That's not possible right now, which means what? If they're not going to cut, that means banks are going down. It's just a matter of time. It says, quote, higher for longer interest rate, unquote, interest rate policy is looking increasingly likely. And banks with high exposure to troubled commercial real estate are at particular risk of starting a domino effect. Didn't I just say that? I told you. A domino effect of small collapses that lead to bigger ones and bleed into becoming a real estate crisis. That's what I was just explaining. So if you feel that same way, and I'm keeping in mind, this is Shift Gold. So you have connections, right? You have certain connections. So maybe you're trying to play it safe. But if you're going to say this, then we both know that across the board, there's going to be a massive ripple effect and that banks, big, medium, and small, are at risk. There's no way around it. There's going to be a transformation. The new financial system is their way out. That's why they're speeding everything up now. You see all this legislation, all of these positive happenings for crypto, because it is a flotation device if one is wise enough to use it. All right, so now we're going to go here. We've got three more articles. We have some, maybe we should just do one of these. I have a mortgage article and I have a housing article. Let's do the mortgage article. Why not? It's a positive thing here. It looks pretty positive. So this article was titled Mortgage Rates Dip Below 7% for the First Time in Over a Month. The average rate on a 30-year loan declines to 6.94%. The average 30-year fixed rate fell below 7% for the first time since early April, hitting 6.94% from 7.02% a week prior, according to Freddie Mac. Rates declined for the third consecutive week, but have hovered around 7% for more than a month. A separate measuring tracking daily rate movement fluctuated between 7% and 7.20% over the last 7 days, settling at 7.17% on Thursday, according to Mortgage News Daily. The spring home buying season is usually the most active time for the housing market, but it has been slow this year. Elevated mortgage rates, high home prices, and low inventory are challenging home buyers. Sales of previously owned homes slid in April as supply remained scarce. Quote, it's very hard to have incredible volume when the rates are high and the inventory is relatively low to historic measures, unquote. Corey Burr, founder of the Burr Group, a real estate agency in Washington, D.C., told Yahoo Finance. All right, we're going to close out here with a little bit of gold news now. Let's find out what's happening to our favorite commodity. Yeah. So now, this article is titled Gold Weekly Price Forecast. Gold continues to see volatility as we consolidate, which is to be expected at this point. The gold market has fallen hard this week, but at this point in time, it is worth knowing that the market will continue to be in an uptrend at this point, and that hasn't changed. You can see we've had a pretty ugly week, but really, when you look at the week in the totality of the entire trend, It's just consolidation. It's brutal, it's violent, and it's scary while you're going through. But when you look at these longer term charts, you can clearly see the buyers are still in control. I definitely will say that. Look at where gold is. We may be working off some of the excess froth, and that's not necessarily a bad thing either. The $2,400 level above is a significant barrier to overcome. And you can see we've done it a couple of times momentarily, but not have the strength to leave it in the rear view mirror for good. Eventually we will, and we will more likely than not go looking to the $2,500 level at that point. Okay, so now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.